Deputy Prime Minister Gan Yong is urging companies to drop the wait-and-see approach and act now, despite uncertainty over how US tariffs could impact them. He says this is the time to invest in infrastructure and workers so that businesses can stay resilient, seize opportunities early, and avoid being left behind. At the same time, the government will support firms to transform and compete aggressively to keep Singapore an attractive investment destination. Kate Low reports.
Companies have been putting the brakes on big investments. That's against the backdrop of slowing global trade and tariffs biting. But Deputy Prime Minister Gan Yong says this is exactly when firms should act, not adopt a wait-and-see approach.
In order for us to be competitive, we have to bear in mind that Singapore cannot be a cheap place. We are not cheap anymore, but we can still be very competitive. We deliver value for every dollar that you spend here. So that's important. That also means that we need to continue to upgrade ourselves, to invest in our people, to invest in our businesses.
Speaking to about 600 business leaders, Mr. Gan warned that bypassing trade restrictions through a process called transshipment could trigger steep US penalties. That's a practice where firms move goods through a third country to hide their true origin and avoid higher tariffs.
Mr. Gan says that the global trade landscape has shifted as more countries are turning inward and away from free trade. While Singapore faces a 10% baseline tariff on our exports to the US, he says the bigger risk lie within the ripple effects, from diverted investment to disrupted supply chains, and the potential sectorial tariffs on critical industry such as pharmaceutical and semiconductors.
The business community is already feeling the strain.
In SBF's latest Business Pulse poll conducted in August, over half of the firms still expect a negative impact from the US tariff. Though sentiment has moderated slightly since April. SMEs are grappling with squeezed margin, investment delay, and rising compliance costs. Many are responding by exploring new markets, adjusting pricing, and seeking government support.
Big dreams to export globally.
To help firms navigate these changing rules, the Singapore Business Federation has rolled out an AI trade advisor. It simplifies complex rules on tariffs and trade agreements, giving companies clearer guidance to stay compliant and competitive. Beyond tackling immediate challenges, authorities are also looking to compete aggressively for investments.
Singapore has always been the Boy Scout, right? We are a place for investments where we stand for stability, we stand for certainty, we stand for good regulations, good governance. Those are strengths that we have. We are not going to necessarily abandon them. But I think we also have to be more clever in a world where rules mean less, tariffs are commonplace, and we have to compete for investments with other people who may not be prepared to play by the same rules.
He adds that Singapore will support more firms to grow overseas. That's even as the country continues to boost its role as a hub for new flows like data to power technology and artificial intelligence.